Hey, 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 welcome to the weekly wrap up. Now, wherever you are watching in the world, whether it's good morning, good afternoon, or good evening, or the middle of the night, hi. So we've got some breaking news, actually, we don't normally have. Bank of Japan in the last few hours have announced that they're tightening yield curve control, YCC. So this affects the JPY 10Y chart, so the 10-year yield chart. Now, this is hitting levels that we haven't seen since global financial crisis. So, that's 2008. And they're worried that their inflation is like crazy, wages are going up, all of that sort of stuff. So they've finally stepped in and they're like, hang on a sec, we're going to put some rate increases on this, and the markets have reacted. So Bitcoin's pulled back. Bitcoin is a risk asset, whether you like that or not, whether it's digital gold, it's still a risk asset. And essentially, that's why Bitcoin crypto pulls back first when we get this sort of news. Where does that kind of leave it? So I'm going to jump straight into that chart so we can have a look, because it's like literally off the charts at the moment. If I can work out how to use it, there we go. So basically what's happening is so yield curve control is the policy where the Bank of Japan, so it holds a 10-year Japanese bond at a target level. So they've been wanting bonds to be, lower than kind of 150, 155-ish, and they're like crawling up to 160 at the moment. So the policy is basically they buy as many bonds as needed. So that keeps borrowing costs low and turns Japan into the world's cheapest funding source, because traders borrow against the yen, they deploy it into higher yield assets globally, and that's the liquidity that goes into the market. So money flows into repo. So this is what I've been talking about for quite a while. So, but there's two stages to repo. So there's a tightening shock stage, and there's where we see stress inflows into repo. This is now. So basically, that stress eventually leads to a stabilizing factor. But when we're looking at a chart like this is what needs to be stabilized. And then after that, we see liquidity expansion and risk assets run. So we're in the early stages of risk assets running crypto. We're not there yet. So because the BOJ, Bank of Japan, has just stepped in, said probably going to tighten yields, so not be buying so many. So basically, repo money is going to brace for this. We saw that Tether's heavily invested in repo money. That's usually a good move. So once yields start to settle, once this all settles and, the world goes, okay, it's fine. Okay, we can start buying this again. Japan's looking after us. We've got cheap liquidity. So that's when the pressure drops in the system. The system all steadies out, and you get big sigh of relief, and then crypto takes off again. This is why I think the cycle's not over. So we're in this cycle with liquidity at the moment, where we're sort of moving in and out. We've got some tightening, we've got some easing. We've got the USA saying that their tightening stops as of the 1st, which is today. And they're going into probably not easing yet, but going forward into easing. So I think by sort of February, maybe March, we might be seeing easing coming in and the world sort of settling. So we've got this period where it's really uncertain, where we're not, if we look at BTC now, we're up, down, and everywhere. Now, 74,445 is that point where I'm like, okay, this is not a bull market anymore, and we're going down deeper. We're not there yet. We're still within this range where we're seeing all of this momentum, and it might be downwards at the moment. There might be a lot of sell pressure there, but we still have momentum happening at the moment. We're still within the bullish means. Look at this weekly, like it's the volume coming in. There's more buy volume coming in. Now, this chart pattern is a bullish harami. So that means it's basically a pregnant candle. If you've watched this for a long time, that's essentially what that is. So it's pregnant with the last move. So it's basically an exhaustion. Candle comes down, we get the next green candle, the candle after that pulls back, and by the end of this week we should be green again. So once we get over the shock of Japan, we get that liquidity, as long as the low doesn't break here, we are good to go. But the reason I think the low won't break is because we hit this directional pivot in this range. Now, that's another strong sign that we're changing momentum. When we go back down to the 3-day, we've got a doji. Like, that's a really nice signal that we're moving up. We've crossed up here where we've got easing sell pressure. So we've had, 9 days here of like increasing buy pressure. We're back down at the moment to this sell pressure, but it does look really good on these charts that we're changing momentum. And I keep saying that as long as this continues to hold in this range, we've still got another sort of momentum going upwards. I don't think this is over yet. I think max pain comes when we're heading into sort of January and we're hitting those tops where it could potentially be a head and shoulders. And then we're coming back down again. And everyone's like, oh my God, this is the end. Crypto's dead. We're coming back down. This is the bear market's kicking in. We didn't pass certain levels. And this is the head and shoulders everyone's been talking about. We're not there yet. So, we're sitting on this neckline at the moment. So this might come back down and touch that. But we've got this doji candle there. And that is a really positive sign that this is just a pullback. So this is just, the market reacting to what the BOJ just said, Bank of Japan just said about the 10-year bonds and the yield curve control coming in. So that's what's happening. So don't get all stressed. It's just part of this cycle where we're going, okay, this is like a bit crazy in this region, and we don't know if we're, topped out already, or we're coming into the bull market for another run, or we're going down like into the deep depths of the bear market, like the traditional 4-year cycle. If we look at the burner chart that's on my X and on Threads, so if you're following those, then literally we're going into that year where we're going up, where this is a blow off top, and potentially a lot of money can come into crypto, especially if we get like strong regulations in the USA that say that crypto's safe. We start seeing more inflows into ETFs and that sort of stuff. Literally banks like JP Morgan start pulling their heads in, because a lot of that FUD for Michael Saylor was caused by them. So then we've got the Tether FUD, because people don't know how to read a balance sheet. They just think, oh my God, there's no profit in this, and Tether's going broke. And it's like, hang on a sec, Tether released that they had billions and billions of dollars in profit, and all of a sudden they're going broke. How does that happen? So go to the source. Go and see what the actual business is saying. Go to the source. That's like literally stop getting caught up in this FUD cycle, because this is a constant FUD cycle at the moment. It's going to go from one thing to the next thing to cool down the market so that they can build the liquidity to move the market into the next phase. So that is what's happening at the moment. So just be super cautious out there. Small positions. If you are trading, follow the news, follow where those cycles are going. And I don't think we're breaking the low at this point. I do think we're heading up higher. 106 is a pivotal area in this, and it's literally a pivot, so it's a pivotal area. So that's kind of where we're sitting at the moment for BTC. This to me looks to be like it's a pullback. So we break the low. Hopefully we hold that 74,445, and then we continue higher. But I don't think we're breaking the low at this point just yet. So when we go to the daily, we're still looking good on the daily as well. As far as I'm concerned, we've probably got a little bit of cooling that can happen in this region, but we're still pretty low on all of the charts. We've got, a bit of sell pressure over the last couple of days. We've only seen that big move here because that's just usually people give up after there's been a few days of sell pressure, and it just lets the market relax, especially when we saw the DOJ news come out this afternoon. So just be super cautious. Now, BTC bleeds 1%, alts bleed 5 to 10%. Keep that in mind when you're trading. So there's not a lot we can do about that. US dollar USDT is again strong. We're still holding those pivots. We're still within these ranges that this is still like within the bullish pattern. So there's no stress there yet. DXY, which is the US dollar index, is sitting below the pivot still. So we want that to continue because obviously BTC is inverse on the USD. So when BTC is up, this will be going down, DXY down, BTC down, BTC down, USDT will be going up. So DXY, USD will be going up. So just keep that in mind. BTC dominance bounced off the support. So that's another good sign. It might come back and retest one more time, but it's still looking good out there. It's not like the most drastically horrible thing. It's just liquidity being shuffled around at the moment. We need to follow where the liquidity is going to see that it's, this is a stress point on the market. So we've been waiting to see what Japan do. We're waiting to see what the USA do. And so that's essentially what's going on in the market at the moment. Obviously, the total crypto market cap is going to be pulling back at the moment because liquidity is coming out. Everyone's like, oh my God, BOJ, hawkish, and that's it. We're out. So, if you are in that group, sit on your hands, wait for the market to fully recover and, stop taking bites out of it. Or you can come and join us in it getting started in crypto, because this is brought to you by WEEX, and WEEX bring you free trading crypto signals with scalps, and like they're killing it at the moment. So, when we can't post spot signals because the market's been so incredibly crap. That's an understatement. I was going to say something else, but I thought I've got to keep it PG for YouTube. So, literally, it has been so incredibly crap, and the scalps are a lifesaver. So head to gettingstartedincrypto.com, go to the free signals, sign up to WEEX and fill it out, and it's totally free. You get the signals delivered to your inbox, or you can jump onto the site. So, or download the app, Getting Started in Crypto app on iOS and Android. So yeah, that's what you want to be doing. So, and I need to say hi to Joker. So he's messaging on X, and yeah, he's one of my followers. So hi, and hi to everyone that's watching in at Getting Started in Crypto. I can see you all commenting there. So hi. And of course, we are live here on X, YouTube, and inside Getting Started in Crypto if you're in there. And if you're in Getting Started in Crypto, you can ask for charts within, not that they're very good at the moment, but you can ask for charts in the chat. So let's head to ETH. So similar pattern for ETH, we saw this Harami candle, which is a potentially bullish candle on the weekly. The 3-day similar hit the MAs, which is showing strength. So 100 and 200 on the 3-day, that's a sign of strength. We've also got this doji here. Potentially we should, at the lowest, it may come back down and retest this region. But normally with a doji, they hang around this region, and we should start to turn around as of, tomorrow or the following day, once the fallout from the DOJ settles. So, and we'll probably trend sideways for a few more days. So I don't think it's going to be an instantaneous like green candle. But yeah, so we want to be holding in these regions. ETH BTC is still holding that 200 MA on the daily, and the 100's curling down, which is a bit concerning, but we've got a falling wedge pattern here, and it's not the ugliest pattern that you could have for this breakout. So if ETH continues to gain strength against BTC, it should break out. Ideally, the next test point would be the 100 MA, which is sitting at 0.3617. And yeah, that's pretty much it. So a super quick one today, because I'm not going to look at alts because they're going to be horrendous, all of them. And because, like I said, if BTC does do 1%, alts do 5 to 10, sometimes even 20%. So that's kind of what happens. So, well, it's not kind of what happens, it is what happens. So we're just going to hold off for a bit, sit on our hands, wait for the BOJ, to settle all of that news, and then the market should have a nice little bounce as we get a little bit of liquidity back. So there's not a huge amount of liquidity in this region. The liquidity does move around. And as I keep telling you guys, crypto is a risk asset, and it will often be more bearish when events like what happened with Bank of Japan today. So if you're not sure what that was, go back to the beginning of this and just do a quick search on Bank of Japan, BOJ 10-year yields, and what they're doing with the YCC on those. So yeah, so that's about it. Quick, short and sweet. So I will catch you on X. Now, if you've got ever any concerns about what is going on in the market, please tag me in, because I can normally tell you whether it's FUD or it's real. And because there's been a huge amount of FUD, and the more FUD that comes into the market, the more we know that the cycle is starting to change, and the bottom is close. So hopefully this previous low holds over the next week, and we get a continued bounce for that right shoulder, and then we're going to have a pullback more than likely at that shoulder, and crypto will be dead again. So yeah, it's been dead about 450 million times. So one more time won't hurt. So yeah, so catch you all on the socials. And if you like psychology, I've posted a few on X and on Threads, but if you prefer that sort of stuff, and you still want to see my face, then you can head to TikTok and to Instagram, and I post on there 4 to 5 times a week with quantum physics, psychology, and just general sort of advice stuff that I find interesting. And it's more stuff that I find interesting, and you'll sort of get to understand what I like. So yeah, so I'll catch you all next week here on the weekly wrap up. Thanks, guys.